Thank you very much for coming. Thank you very much, Mark, for an introduction. It's a privilege for me to be standing in front of you today. And primarily, I was really thinking a lot about this presentation, how I would like to make it, how I would like to position that, how I would like to explain to you what we do, or like what is coming, what would be the next actual future of the payments. If you may realize that Mark mentioned that we are comparing, so to say, crypto and fiat payments. But to begin, or even to dive deeper into comparison, we should understand how the crypto processing in general works, what it is like what challenges it has, how these challenges of the traditional payments may be solved by using the cryptocurrency. So without further delay, I would like to start, and let me just briefly guide you on the normal general user experience of every single user who's using any crypto payment processing, because myself, I'm coming, as Mark mentioned, Equar and B2B Pay is one of the companies in the group of companies. Originally, it's B2Broker, so we empower brokerage businesses, we empower exchanges, we build them from scratch, or they may utilize some of the services we have, starting from institutional margin liquidity, CFD, some of the IT infrastructure like CRM system, IB modules, copy trading, so on and so forth. So that is why the question with the crypto processing is really important, and we I presume one of the best expertise-wise, since we've been in the market for more than 10 years. But anyway, for the general user case, for the user experience, how it works. Crypto, in this sense, may be used in the different scenarios and the different formats. You may use it for traditional goods, selling traditional goods, but charge your clients in crypto. You may use it for funding your account. You may use it for accepting payments cross-border. You may use it in any form that you're a customer, you're familiar with the traditional payments. In general, user experience case is the following. So there is an end user who's willing to pay, whether it would be FX or crypto industry, whether it would be gaming, consulting, literally any business today in today's world, which is online. I presume 99% of the businesses, they are online. They may start accepting crypto. As soon as the user, as soon as the good would be solved, as soon as anything would be provided for the amount of money they are willing to spend, there would be a checkout page. Checkout page is I'm pretty much sure that everyone understands that, but checkout page is something which in crypto world may be more flexible compared to the traditional finance. So you may put custom different rates, different layouts, different form factors. You may play around with that. As soon as it's going to happen, I'll give you, well, to my mind, the best example would be our own crypto processing called B2B Pay. So as soon as the user will generate an invoice, he will choose the currency. With the crypto, he may be paying fiat invoice, so it may be GBP, Euro, Yen, anything. As soon as the system will know the conversion rate, as soon as the system will understand how much would it be in certain crypto, it may be done. Invoice would be generated as soon as the transaction would be initiated from external sources, cold storages, exchanges. The confirmation would come to an actual to a crypto processing company, and the crypto processing company, usually it's being done for the callback, is going to notify the end system, the actual business who built it or who integrated this solution. Super straightforward, absolutely zero difference from a traditional way of payment. The only difference, it's extremely cost effective and extremely fast. It cannot be even compared for the business owners, obviously. So coming a bit deeper into that case, some of the beautiful slides for you to have a better understanding how does it work. As I mentioned before, so there is an invoice page or address generation. There is a transaction initialization to a certain way, confirmation, because every single transaction on a different blockchain, of course, it may vary, but it requires some sort of the confirmation, whether it's miners, whether it's proof of stake or proof of work, it really depends. But the transaction going to the block, the transaction is visible and publicly available for everyone, or every single person, every single participant of this blockchain. So what it brings to us, it brings huge transparency. And as soon as the credit would be happening, well, that is where the magic happened. This is where every single business may decide for itself how he would like for this to be represented, how he would like this action to take place. Some of the beautiful scheme over here, if you may see, there is a different blocks, everything for API, obviously. The solution, an example of the crypto processing, such as B2B Pay, is a direct connection with the nodes. It's synchronizing all of the information. Then, as soon as it's synchronized, as soon as the payment has come, that's it. The payment would be located within the account, within the wallet, within the address of an actual user merchant or the business which is using the crypto processing. If we dive deeper, a bit more technical, I don't really want to bother you with a lot of technicalities and the technical details, but crypto processing consists of the multiple of parameters. And if you think that, I'll give you a very simple case. A lot, even on a daily basis, some of the potential clients, they're coming to us and saying, okay, what is the utility they are bringing? Why I couldn't just use any crypto exchange account and give to my clients the address, just copy and paste it into the invoice that I'm going to charge them? Of course you can, absolutely no issue with that. But as soon as you would go publicly available, as soon as it go into the enterprise level, as soon as the crypto will be adopted to everyday basis and thousands, hundreds of the transaction would be happening within a day, within an hour even, you would not be able to do so in a manual way. And that is why you're using such services, and that is why you optimize the flow and you generate additional flow. Because I'll give you an example. Maybe I'm not the most representative, the best example for such cases, but in case I'm buying something online and in case there is a chance for me to pay in crypto, I would rather pay in crypto. It would be cheaper, it would be faster, it would be more transparent. And if something, I may always prove that the actual payment took place. Coming back a bit to the actual crypto processing infrastructure, right? There is, as I mentioned, as we discussed before, the payment page, the API, everything for the rates, for the processing, for the synchronization, for the creating invoice, generating the invoice, and to integrate it into actual layout or into actual backend of your current business. The user panel interface, it's more for an admin perspective. It's really important if we're dealing with crypto, it's really important to understand to which bill it belongs, to which client it belongs, because blockchain is anonymous, right? There is just a bill, there is an address to certain bill. And this is through certain parameters that being implemented there, like tracking ID, you will have a chance to track it and you will have a chance to understand that client number A or number 1 sent you this and client number 2 sent you this. Then, of course, there are lots of integration, and the most important one, of course, from a technical perspective, yes, that monitoring some of the rates provider, but verification, first of all, and IML providers. IML providers for, again, giving you an example of our solution, we're using chain analysis, we're using Crystal, and we're using Elliptic. Depends on the currency, depends on the protocol, and this is a must-have for every single crypto transaction or every single jurisdiction or license under which this crypto processing operates. Of course, there would be a full back office, pretty similar, and I guess majority of you are very familiar how the back office of the payment system or any banking environment may work. There would be full reporting, full connection, different rights, different checks, what, when, what took place, so on and so forth. So again, slightly mistaken if you're thinking this crypto is complicated and this crypto is not transparent. It is. It's even more transparent, rather. A few of the statistics, just to small break on the technical aspect, just a few statistics on an actual adoption of the crypto. Obviously, crypto is coming, and crypto is the next future, definitely. I have zero doubts in that. 64% of merchants, that is what we have identified, they are more than happy to start using crypto. If you may see on this chart above, it's more about stablecoins. Stablecoin is a type of the cryptocurrency which is backed to a certain amount of fiat, backed by fiat, you may say. Usually it's US dollar, euro, GBP even. It may be like that. And market capitalization, I guess everyone is following the current news and the current trends. Recently, 2 weeks ago, the Bitcoin is the best example of the crypto, the first and the best example of the crypto has hit all-time high, more than 73,000, even slightly more. Now it's a bit a drawdown, but anyway, I presume it's coming back. And the problem, not a problem, but the logic is the same. So the more demand is coming, the more crypto would be adopted, and the more people would like to use that cryptos. Some of the gender statistics, that 35% of men in the age of between 18 and 35 years old will plan to pay with crypto. That's just an example I mentioned before. And 75% of the retailers plan to accept crypto. But I understand that there may be some obstacles in certain way to start it immediately, but I can assure you all of them may be solved. All of them may be solved just according to the proper legal structure behind of how this would be. And of course, 40% in the same age group say that they plan to pay using crypto in the future. Again, as I mentioned to you, if there is a chance to pay in crypto, I would rather take it. Some of the general numbers, that's an open information. It's for the current month, for the March. The general capitalization of the blockchains per blockchain, USDT. Well, in certain way you may not saw that USDT is not a blockchain. USDT is a currency which is being run on different blockchains, but it's more than 103 billion, and USDC as well. USDC, if you Circle, being made by Circle. So the circulation of money over that market, over that type of assets, over that type of payments is enormously huge. A few challenges that I mentioned you before, and a few challenges in how the crypto processing, or how these main challenges may be solved if you're starting to using that. First of all is an address management, because how it works. Coming back to my example with the crypto exchange, right? As soon as the clients are going to pay that, and as soon as it's going to be viral, and then on enterprise scale, 10, hundreds, thousands of people are going to pay, it's important to manage the addresses. So the addresses would be matched, the addresses would be coming to a certain product, certain client who paid for this or that. This is what crypto processing solution, and again, I would be giving you an example of the B2B and Pay, how we made it. So it's personal wallet generation per currency, per client. It's automatic settlement, because in our system, I will describe you later on, but in general, not only in our system, but in our system as a best example, there may be two ways of settlements. It may be all converted into one. It may be fiat currency, USD, Euro, GBP. It may be stable coins to reduce volatility, or you may store it as you get. So imagine you have 10 clients, all of them are paying in different cryptos, and you're actually storing these cryptos if you're okay with that, if that's the risk module that your company is willing to run. All of the statistics monitoring, it's really, really important. Statistics analytic, what has happened, for you to understand the patterns, for you to understand the flow, on which currencies may be added, on which flow, on which certain type of crypto asset you should maybe focus your marketing slightly more. Overall balances, that's clear. Multiple blockchain display, yes, because for the crypto processing, as I mentioned to you in my previous slide, for the different blockchain, USDT for the crypto processing solution, or just for the payment system which operates in crypto, is USDT, regardless of the protocol is going to use. And this what brings utility for you. So some of the transaction and different protocols, they are slightly cheaper. Giving you an example, ERC, which is Ethereum, run by parent currency Ethereum, will cost you around $4 or $5, 3 point something, maybe $4 or $5 per transaction. On Tron, it would be around $1. On Avalanche, it would be even cheaper. But you, as the business case, as the owner of such solution, you don't need to be dependent on the actual your users. So you are setting the flow. You're receiving this money, and the crypto processing solution convert them in the most appropriate way for you. The second challenge is an actual token collection. Again, sorry for that, but I will need to get a bit back to the logic how it operates. So every single address per client per currency, if the tokens is going to be sent, tokens as a derivative, or tokens is a cryptocurrency which is being operated on the main blockchain currency. As example, USDT is the token, operates on Ethereum, that's USD TRC. On Tron, TRC. In order to collect this, and in order to get this money collected, you need to initiate an actual transaction, because it's all of those addresses that are being generated for your users in your main address where all of the money would be accumulated, they are different. They are not connected to each other unless they're in the same blockchain. So that is why there should be an actual transaction happening, whereas you would be collecting all of those money, paying a bit of the parent currency fee for the blockchain transaction and getting this collected. And then as soon as the funds will hit, as soon as it's in crypto, obviously, as soon as they will hit your main address, your settlement account, you may say, or settlement wallet, you're free to do anything with that. There is no rolling reserve, there is no security deposit or anything like that. As soon as the funds, your client's funds, are there, that's it. You are free to use them. You may withdraw them to the cold storages. You may withdraw them anywhere you would like to. The second challenge, as I mentioned before, and really important one, is KYT, Know Your Transaction, which is being done. Again, giving you an example of the B2B and Pay, Crystal, Chain Analysis, and Elliptic, a general scheme, how it works, what transaction would be approved, and what can be considered as suspicious transaction. According to the different jurisdictions, there are different protocols compliance-wise, how to deal with that. Obviously, it may be even blocking, but I mean, it's all about the jurisdiction. Giving you a bit more example, based on the B2B and Pay, we have 2 active licenses in Italy and Estonia for such services, and even within the EU, these 2 jurisdictions, they are not similar in terms of the KYT, in terms of the risk, what is the risk score, the transaction is permitted, which is not. All of those systems like Crystal, Chain Analysis, and Elliptic, they're seamlessly integrated to us, and that is why every single incoming and even outgoing transaction would be checked through them. So from a compliance perspective, yes, crypto is now more than compliant, and especially if you are dealing with B2B and Pay. Challenge 4, and the main one, since I presume majority of the businesses, they would be relevantly new. Okay. So majority of the businesses, they would be relevantly new. The security, what matters? The security, not only to the addresses, because if you're looking at the crypto processing, all of the addresses, they're actually being opened and signed the transaction as well through the servers. In such case scenario, the B2B and Pay, but to access to those dashboards, to access to those funds is being done on the following parameters like 2FA, whitelists, specific user right per user of your admin panel, different withdrawals with approval, some of the dedicated wallets, whitelisted IPs and whitelisted wallet from where the actual transaction would be taking place. So security as well, it's not an issue anymore. It's not secure to a certain way. It's very secure unless you will set up accordingly. As I mentioned to you slightly earlier today, there are two main models of the crypto processing for the B2B and Pay specifically, but many crypto processing, not many doing the same that we do, but some of them. Anyway, we call it digital wallet and blockchain wallet. As I mentioned to you, digital wallet, it's crypto fiat. So you may acquire more than 50 different or even 60, even slightly more, around 60 different coins that all will be coins and tokens, and all of them would be converted into one. The good thing about the crypto processing and the good thing why it's vital for the business nowadays, the actual cost. Giving you an example of ours, we're charging only 0.4% on incoming, and that's it. Exchange, settlement, that's all free. So 0.4% is an actual charge for turnover of the funds of any amount. It's all based on the volume. This is if we're looking for the merchant solution or the digital, when you get everything converted into one. But if we're looking at the blockchain, where actually you store what you get, and every single wallet under your account would be dedicated crypto wallet per currency, obviously, it's starting from 0.3 even and lower. The more you process, the less you are going to pay. But in this case scenario, there would be no conversion happening. Yes, and that is why it's slightly more cost effective. It's working 24/7. There is no holidays. There is no delays. As I mentioned to you, there is no security deposit, any kind of the rolling reserves, and the charge. The charge is literally cannot be compared to a traditional finance. So, concluding the part with the crypto processing, right? As mentioned in the beginning and before, crypto processing is an actual future, and my expectation, of course, I would really love it to make it possible sooner, but in the next 3 to 3 years, I presume, paying in crypto would be something that we're super familiar with as tapping our card. I really hope so. Since I have a few moments to spare, just a few words about the company. B2Broker, as I mentioned to you before, is a mother company for all of the projects. We're a liquidity and technology provider. There are multiple brands operating, some of them related to purely IT, and B2Broker is the company. In general, there are three main pillars. Payments, the one we discussed before, margin liquidity from a brokerage perspective, fund managers, investment fund, crypto brokers, crypto exchanges, so on and so forth. IT side of the things, all of the IT infrastructural costs. So we're basically building the trading businesses, let's say brokers and crypto exchanges, and we empower them with everything from A to Z. And obviously the institutional margin liquidity regulated in Cyprus, regulated in Mauritius, planning, we're kind of finalizing the FSA out of Dubai. It's where the headquarters of the company, and as well as FCA is coming, but if you may all know, it may take slightly more time than expected. All in all, yeah, we pretty much can service any crypto or even traditional business. Depends if it's trading related and 100%. If it's just a traditional business, we may fully cover the payment aspect. I presume that's pretty much it from me today. Thank you very much for your attention. Thank you very much for being here. In case of any questions, our booth is right next to the entrance. You will see it, B2Broker or B2B and Pay. If you'd like to have a further discussion, I would be delighted to assist you with that. And yes, thanks a lot.